we are anticipating from here. You seem net bullish on where we're going from these levels, and you're obviously believing in the momentum story, and that foreigners searching for yield are going to continue to drive our market higher.
I love using these words. I'm cautiously bullish, I think. I think for good reason, just how volatile things are and how amazing things have increased. We're sometimes very reluctant as investors and brokers to believe what's actually happening. And there's always two schools of thought. There's the one school that believes that there's a massive disconnect between the reality of the economy, being the consumers, and what the stock exchange is doing. Then there's the other school of thought that explains the current artificial movement, because basically that's what it is. But be it artificial or not, there's still money to be made on the markets, and you can't just sit back and think, it's artificial, I can't go into it because it's not real. I mean, in the short term, none of it's real. It's just based on sentiment and how people feel in a given week regarding the news flow that's out. So you have to play towards that, unfortunately. I mean, you're in the equity market because that's where a portion of your wealth always is. You've got a bit in cash, a bit in the equity market, a bit in property, and so on. And saying all of that and having an idea and trying to grasp all these different points of view, I still feel that there is upside potential. I mean, if one looks at statistically, the markets have literally done nothing in the last 3 years. I mean, if you were unfortunate enough to put your money in 2007, you're back to where you started. You're actually a minus because you've got inflation to compete with. So I think taking all that into account and having a look at company valuations, stock picking is going to be incredibly important going forward. I still feel that if you're buying into well-managed businesses with good balance sheets that have got a good story and you're understanding what you're doing, that you're not just there to make a quick buck, I still think that you can get above average returns. You're certainly going to do better than money in the bank. I mean, you're getting 5.5%.
Exactly. When you say above average returns, are you looking towards? I mean, there's only 15 more.
Look, it's a fair question. How much am I going to make?
33,000.
No, exactly. How much am I going to make in the market? I mean, the markets could go to 36 if it wants to, or 40, or whatever. I would say realistically, one would be looking at including dividends a move of between 10 and 15% for this year. Doesn't sound like much, but it's still CPI plus 4. It's still double what you would get in the money market. So I still think one should remain long on this market, at least going forward this year.
Nick, it's great having you back on the desk. Hopefully we're going to see you a lot more often.